What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the overall market and how this may affect Tesla moving forward, what's going on with the new stat and technicals that just came out, something very big that Elon Musk also said, and what I do predict to happen to Tesla for tomorrow, as tomorrow is going to be the final day for Tesla before the last close before the CPI report. Before I break anything down about what that could actually cause, though, before I give you guys any price predictions, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. The offer ends in just 1 week. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up about 1.02% for the day. I did make a prediction that Tesla would test 168 for Monday. We actually came just a little bit above that, around 169 instead. It didn't go as low as I had thought, but then overall we did get that bounce. I did tell you guys about how Tesla could drop and then bounce, and we actually closed very flat. We didn't really get a nice break above this 174 area as well. So I also mentioned that 174.5 is going to be a very important level for Tesla. If we broke it and held it very nicely, we would most likely see Tesla break above the supply zone to fill the gap at 178. Instead, during the pre-market, Tesla got rejected off 174.44, 6 cents away from what I was mentioning, and it actually failed to get a real very strong breakout. So until then, it's looking like the market is starting to weaken a bit, and I am seeing lots of bearish divergences on the triple Qs, the Nasdaqs, and that's starting to tell me that we might sell off a bit tomorrow. We might get a somewhat red day. That's completely normal before these CPI events. What I was wanting to see, or what I was hoping for, would have been like a sell-off today and then a pump tomorrow, but things could change in the blink of an eye in the markets, especially as new pieces of news come out. And that's why I'm making this adjustment that we might see a sell-off tomorrow for the collective market, and this will affect Tesla. Now let me break down exactly why that is. Looking at SPY, I want to note that max pain for tomorrow is at about 411. The put to call ratio is at about 1.58. We are seeing more puts out there, of course, but nothing too extreme. Now, I also want to note that it's very, very minor. The amount of puts and calls and options expiring is very minor. So the market makers could afford to see us even close very close to max pain or even below it and get some of these puts in the money. They're completely okay with that. I mean, they're not always going to destroy shorts. It just has more to do with the levels, the ratios, and other factors like that. The ratios aren't too crazy. The amount of puts expiring is not crazy. So that's why it's still very possible for us to cool off and close kind of red. Another big red flag would be some data coming out from the Fed. I mean, we had data coming out today, and then we also have Fed speakers tomorrow. We have the Fed Jefferson speaking. This is going to be an hour before the market opens. We have some data coming out, and then we also have the Fed Williams, who tends to be more, I believe, a little bit more hawkish typically. And they're going to be speaking at about 12 o'clock p.m. Eastern time. And that, once again, could cause some crazy volatility for the markets. If the Fed speakers incite some fear, this could cause a sell-off. So be very, very careful. And on top of that, I just want to note that Tuesday is the final day, the final close before CPI, because CPI comes out on Wednesday before the market opens. An hour before the market opens, the CPI and core CPI numbers will be out. When the data comes out, the market's going to make a massive, massive move. The market's getting very tight right now, and you have to be ready for that. Now, what this means and what this tells us, basically, this whole, like, Tuesday with the market closing, there's going to be a lot of hedging. There tends to be some selling pressure near the very end of the day typically. More hedging tends to happen, and also repositioning from larger funds, which could lead to more selling pressure, right? Typically, that's what happens during these big events when there's lots of capricious price action and we don't truly know how things are going to go. So that's the reason why, and at least that's part of the reason why I think the odds are favoring us selling off. And I'm going to break down the charts in just a couple of minutes. I also want to note that we had PayPal earnings. PayPal is currently down at the time I'm recording this. Palantir has earnings. Six Flags just had their earnings too. Nothing too spectacular. For tomorrow, it's Airbnb, Nikola, Rivian. And then for Wednesday, we have Roblox in the morning. And then finally, Disney after the market closes. Disney is going to be one of the biggest ones for the week. Nothing too big for Thursday or Friday. However, don't forget that the biggest thing coming out for the week is CPI. The market's getting ready for that. Now, we had another bearish piece of news that just came out. This actually came out around, I forgot the time. I think it was closer to about 2 o'clock p.m. Eastern time, I believe it was. And right here, you guys could quite clearly see how the market reacted to the news. The market was just holding up. SPY was around like the 413s, almost 413, and it came all the way down to 411 in just a few minutes and right back up. But why did it do this? And that's because we got some bearish news. And typically the market would just start selling off harder. This time the market was held up, so very interesting to witness. But here's what happened. The Fed had a report that came out, and we have this survey from the Senior Loan Officers Opinion Survey, and they said that the requirements to get those loans are getting tougher and tougher for commercial and industrial loans and businesses, and also for household debt instruments. So for like the mortgages, the home equity lines of credit, and also credit cards, it's becoming harder and harder to get those loans as requirements are becoming stricter. This is significant because this could lead to a credit crunch event or the tightening of credit conditions. That means that liquidity is going to dry up more in the markets, right? It's going to be harder for banks to take these loans. And when that happens, there's going to be a lot of pain coming. You have to remember that millions of Americans were living on credit card debt. And when these payments get closer and closer to being due, they're going to have a harder time at making these payments. Then on top of that, right, their credit scores, for example, are going to start going down. And we're likely going to see the requirements to take more credit in a high interest environment get tighter and tighter and tighter because it's harder to do that. And that could lead to a more severe recession for like the more longer term going forward. That is something that's very concerning. That's something you have to be ready for. And that's part of why this is very bad news for the market. I would say like for the more medium to long term, especially as the recession is approaching and unemployment goes up, right? Not good news. But for the short term, I mean, the market just, it came down temporarily, then bounced right back. Please be prepared for pieces of news like this because of the effect they're going to have on our lives. And don't fall for all of these articles out there that are saying, Amazon and Apple could power the S&P 500 to 4,400, which is 430s for the SPY, which is the QQQ breaking out. I don't really think we could say that just yet until we know what CPI is and if the Fed is going to pause. In my opinion, I don't think that this is how things are going to go. I'm thinking that the market could hold up for some time. Even if CPI is decent, the market holds up. But by the time we approach mid-May going into June, we're likely going to see more downwards pressure because of the banks, the credit conditions which are tightening, and we could get more negative news with bank collapses, of course. We are also due for, in my opinion, another hot CPI very soon. I think it's going to come soon. At least the odds heavily favor it. With energy prices going up and seeing commodity prices going up, I'd be super, super careful. Like very, very cautious if you're trying to turn into a bull right now. I think there's downside coming over the next 3 to 4 weeks, maybe as soon as like 2 weeks. And I don't think the market's going to hold these high levels for now. It could pump after the Fed pauses, of course, but until then, there's likely downside still coming in the future. That's more for the medium term, not for the short term. I will talk about that in a couple more minutes for the details. But as far as Tesla goes, we have some news that just came out. Tesla announced that increasing lithium is critical for them to transition the world to sustainable energy, for our economy to do so. And that's the reason why they have their in-house lithium refinery outside of a city in Texas. So very awesome news. This is going to help Tesla become more independent and improve their production capabilities going forward. In the future, they also are going to process other intermediate lithium feedstocks, including those from recycled batteries and manufacturing scrap. So that's making them a lot more efficient, helping them cut costs and prices. And I consider this great news for Tesla for now. On top of that, Tesla changes course with its full FSD technology to introduce end-to-end AI in the V12 updates. This is what Elon Musk was talking about very recently. In the past, Elon Musk was talking about how FSD is going to be released and Tesla will have fully autonomous technology very, very soon. I disagree with one of the points that he made. I think he mentioned that as soon as this year, Tesla should have fully autonomous technology. I don't think we're ready yet. I think it's going to take a little bit longer than that. And I saw it somewhere, it said that about Elon Musk. But I mean, even if I do disagree, I still believe it's going to take many years for us to actually get there. But nonetheless, I mean, the company is still making great, great, great updates every single day, but there's still a lot of work to be done. As they continue to grow, more and more audiences are going to be inclined to buying into these cars. And I believe that the closer we get to FSD, full self driving technology, the better it's going to be for Tesla, as this is a multi trillion-dollar market that's barely being tapped right now. Now, some pretty good news is the fact that even though inventory levels are going up to almost 200 right now, they're still well below the 600 mark we saw from mid April. That's a good sign because more people are buying Teslas in the heat still, and it's not too bad. Price price ratio is improving for Tesla stock. We're seeing some improvements from there. There's not much else new that came out except for Tuesdays, where Tesla tends to be green only 50.68% of the time, so almost 50-50. And also, the short interest is very, very flat. Only about 18.7 million Tesla shares shorted recently. Volume on Tesla's a little bit weak, only 112 million. Not too crazy, not extremely weak, just a little bit weak. And finally, I'm seeing that the short volume has come down to about 58% or a little bit under that. Now, to end the video, I'm just going to talk about the charts right now, but I have some bearish developments I want to talk about. Now, as far as Tesla goes, for it to turn really, really bullish, it needs to break above 174.5. That's going to become a very bullish signal, and it could get to 178 from there. For it to remain bearish, or at least a more bearish case, would be Tesla breaking down below 168. So make sure you guys are ready. For now, this is like the wedge Tesla has been respecting. I can't say this with high confidence yet. I want to wait for more data first. And it's looking a little bit more bearish for like the super short term, but we could get a bullish breakout after CPI. It's still a real possibility. I'm not really fixated on either direction just yet, but I think it's very likely for Tesla to still cool off. So I'm going to delete this. I mean, I don't want to just be too fixated on that for now. We just need more data on Tesla. It looks to me like Tesla has been declining a bit. We have a crossover on the PPO, and I think the collective market might slow Tesla down a little bit. But as long as it tries to hold 170, it's going to be in a good place. But if it breaks below it, then watch 168 and 166. For Tesla to turn bullish, it has to break above 172.5. If it breaks that, then there's 174.5. Break that, then there's 178. It's likely going to push up very hard if we break 174.5 and hold it. Those are the bullish and bearish cases. What do I think is going to happen, however? I'm thinking that Tesla's going to try to pop in the morning, just hold up quite nicely, maybe try to maintain like the very low 170s, and it's going to slowly sell off as the day goes on. Might retest 170 many, many times and break below it to retest 168. And if that happens, it might try to bounce in the process. And I'm just seeing some very, very flat price action. I think it's going to bounce off 168 and close very close to 170, maybe a little bit in the red. And I'm anticipating some very sideways price action, if not a somewhat red close for Tesla for tomorrow. And I'm going to break down exactly why that is, not just based off this like bearish cross on the PPO, but when we zoom out of the chart, like on the 1 hour time frame, there is this bullish cross for Tesla. It might still reject and just cool off a little bit because of the daily candle, the way it's looking. Uh, we do have a daily unfilled gap technically around this like 170 area, if you don't count the wick being a mechanism that like fills the gap or anything like that. On the 4 hour time frame, Tesla's looking pretty decent so far. Momentum is weakening just a little bit, so it is slowing down just a little bit. But now the question is, how is it going to be dictated by SPY and QQQ? One thing worth noting is SPY is slowing down a bit. We have this like downward channel that we're stuck in for now. We have this crossover as well on the PPO. Not much of a divergence, but it is stuck for now. And I believe it's going to respect this for quite a while, especially because max pain's at 411. So I'm thinking that we might see SPY just trade sideways like this, but it might sell off a little bit more and get closer to like the 410s into tomorrow. And then it might bounce off the 410s and actually close once again closer to where 411 happens to be. So that's what I'm seeing for SPY for tomorrow. I also want to add that on the QQQ, it's looking more bearish, and this affects Tesla a little bit more. Now, I say this because when you look at the 1 hour time frame, there's an uptrend on the price, right? The price made a higher high right here. The MACD is showing weakening momentum. It also is making a lower low from the signal line and the MACD. And then on the RSI, it's making a lower high as well. That tells me there's a negative divergence forming, but I don't know for sure if it's going to sell off tomorrow or if it just pumps a little bit more and then it sells off. But when I look at other signals, right, for other charts, they're suggesting to me that we might sell off as soon as tomorrow. So I'm leaning more towards tomorrow being the day the QQQ sells off, especially because once again, it's the last day before CPI, the last close before CPI comes out. I'm looking for a retest of the 200 EMA around this 319 to 320 area. On the VIX, it's down 1.22%. It actually filled the gap that was down here. It bounced off, was that 16.69 the last time it touched this level, and we actually came very close to that today. So what I'm seeing is the VIX is down again. It might actually bounce very soon, and it could be forming a possible like head and shoulders like formation. So maybe we get a bounce off here and we get a temporary sell off in the stock market. I'm seeing some signs of that very, very soon. And I think it's very likely something like that happens, right? So the VIX might bounce. Why? Because of the S&P 500 selling off. And then what else is worth noting is, as I mentioned before, right, the QQQ has this bearish divergence, but the SQQQ has a bullish divergence, the opposite. The SQQQ is inversely correlated with the QQQ. Just like how the VIX is inversely correlated with the SPY or the S&P 500, whichever one you want to use. It's very important to note this because when you look at the SQQQ, the prices are making this lower high, but the MACD is starting to trend up, and we're seeing the same thing on the RSI. These tend to be a little bit delayed, so it's starting to form this way. It's either going to start popping as soon as tomorrow, if not by Wednesday, but I'm leaning more towards tomorrow. I think tomorrow we're going to see this thing fly and approach 30. And I think it's going to happen as the QQQ sells off. And as the QQQ sells off, it's going to negatively affect many tech stocks and even Tesla. And it's going to be correlated with the S&P 500, most likely, in my opinion. For Amazon, I'm seeing this thing just trading flat, retesting the 200 EMA and closing a little bit red tomorrow. It could close around below 105, very, very flat. There's not too much going on. Nvidia is very overbought, like super overbought. The RSI is at 78. I know it had some good news, but we are forming a negative divergence. I think it's forming on the MACD. It's on the MACD, but not the RSI in the 1 hour time frame. But like I said before, it's very, very overextended, so it should try to cool off soon. I'm open to the possibility of it unexpectedly pushing up again because I didn't expect it to push up again today. That was a little bit ironic. I'm thinking that it either pushes up a little bit, then it comes down, or it might just start selling off from here. Both of those are very, very possible and very likely. But I'm leaning more towards it selling off a bit tomorrow with the market retesting about this 287.5 area. If that fails, then there's 284 to be watching for. I think it's most likely going to be testing those. Make sure you watch the 1 hour 50 EMA from here. So I'm seeing a bit of a sell off in Nvda. For Aapl, this is also losing some momentum. Look at the MACD cooling off. On the 4 hour time frame, the same thing is happening. We're losing bullish momentum. We're getting weaker and weaker. The RSI is cooling off too. It looks to me like I don't think Apple's going to crash, of course, but I do think Apple could sell off a little bit and get closer to about the 170 area. 171 is where the 50 EMA happens to be, so we might see it get closer to that. If that's the case, that's going to be a bearish case. It could cause the S&P 500 and also the Nasdaq to cool off a bit. Apple is a giant nonetheless, so completely healthy, nothing too bad. AMD is looking nice, but it is a little bit overbought, and when this happens, we tend to see this thing cool off more. So with the AMD looking like this, we might see this thing cool off to the 92.82 area. If not 90, that would be very, very healthy. Google's looking quite nice. It actually held up today. Might trade very sideways though as the market sells off. It is overbought, so it cooling off a little bit would be fine. But I don't think it's going to cool off too hard. I could see it hitting like 107, 106 and bouncing and closing pretty flat. A little bit in the red though. For Meta, this is also forming a possible bearish divergence right here. So you can see the RSI is quite overbought compared to these levels. I think Meta is due to pull back a little bit, might open very flat, then retest 230, if not a little bit lower, then try to bounce and close a little bit in the red. Finally, last but not least, for Netflix, I mean, this thing is up for now. Very awesome to see this thing up, of course, but looking at the chart, there is a possible accumulation that has completed right over here, and we are very close to where our resistance happens to be. So there's this zone right here. Let me draw it out again. I think it got deleted the last time I drew it out. Right here, there's this massive chop zone, right? This is where Netflix tends to get rejected. I'm seeing signals suggesting that it's losing momentum, and it could have been forming, let me just double check this, a negative divergence on the RSI. We might see Netflix sell off as well tomorrow and might retest 330. If that fails, then 325.96 could come. If that's the case, it's completely fine. Very healthy sell off because there's this chop zone right here. It could get closer to this. So a slight sell off on Netflix seems very likely. That's what I'm seeing. And what's interesting is as the market was green, the 10-year treasury yield is also green. Could this thing sell off a bit with the market? Or is it going to just keep pumping, then the market sells off? I mean, it doesn't really matter at this point. It might start pumping, but I don't really think it's affecting the market like it typically does. That's very, very ironic, very unusual. It had a bullish divergence that formed, but now it could be in the process of forming a bearish divergence. The RSI is a little bit more overbought at this high compared to this one right here. So is it about to come down and fill this gap? If that's the case, that's going to be bearish. If it pushes up a little bit more, that means the market might have a little bit more room for upside before we get a rejection off this like almost 36 level on the 10-year. Once again, it's suggesting a sell-off is very likely. So that's what I'm seeing for tomorrow. I'm not saying this sell-off will last all week. I'm not saying it's going to last forever for Tesla and any other stock. Just for the short term, as we approach CPI, I think it's very likely. All right, guys. So for Tesla, like I said before, for us to turn very bullish, we have to break 74. For us to be very bearish, we have to break below 70, then 168, then 166. My best prediction is kind of a mix between. For now, I think Tesla's going to remain very choppy, start off very sideways between 173 to 170. And I think it's going to break below 170 and retest 168. It might try to bounce off 168, but close very, very flat, maybe a little bit below 170 or very close to 170. That's what I'm seeing for Tesla. I think the market and the QQQ may dictate it, but this is just a very short-term prediction, and everything could change depending on CPI. If CPI pumps us, then we could see Tesla pump again. If not, it is what it is. But make sure you are very patient in a market like this. Make sure you're prepared for lots of manipulation, and make sure you remain calm, cool, and collected in your trading or investing journey. That is not financial advice, by the way. Thank you all so much. Have an absolutely spectacular rest of the day. Tesla to the moon, as the long term is still incredibly bright. And don't forget about the Moomoo link. It's down below and in the description. The offer is almost over. Thank you. Tesla and the market to the moon, and peace out.